What's going on, everybody? My name is Zach Hartley and welcome to the weekly watch list video. Merry Christmas. If you don't watch another one of my videos before then, I hope you had a good year. I hope things worked out for you and I hope you are finishing off the year on a high note. I have one trade right now that is just kind of, it's the star on my Christmas tree right now. It's the icing on the cake and it's doing very well. It is in Marathon Digital. I bought options in the stock. They're up 559%. I posted it in my Discord chat. So if you're interested in any of my trades or my analysis, you can follow along there. But this is what my portfolio looks like right now. I've got 4 different stocks that I bought recently. All of them get posted here in this watch list. Some of them I buy, some of them I don't buy. Some of the trades just don't work out. But recently, things have been going well. Marathon Digital is the big one. We'll talk about it here in a little bit. But that's what my positions look like. Now what I want to do is just dive into the market conditions as well as the stocks that are on my watch list going into the week ahead. Okay, when it comes to the NASDAQ has actually had a phenomenal, amazing year. It's done extremely well and it's gone primarily in the upwards right bullish direction. We are now breaking out of previous resistance and things are looking pretty good for the NASDAQ. The S&P 500 is also actually testing previous highs, which is very nice to see. And the Dow Jones here has actually set a brand new all-time high, and so it is also doing extremely well, especially over the last basically month and a half to 2 months here. It has been an almost straight shot upwards. However, in the last 2 days, we have seen a little bit of volatility. I think it was on Thursday, we saw a huge drop off right at 2 p.m. And so we have seen an increase in volatility. You can see that coming through in the VIX in the last few days here, some of the bigger candles. And so it is something to watch for, but we are going into kind of a slow week ahead here over the holidays. When it comes to Bitcoin is having some major trouble getting above $44,000. We just continue to get rejected and rejected and rejected again. If we can break through 44,000 and stay above it with some good momentum, that's going to be a very positive bullish sign. If we see a major pullback and we break down below 40,000 here, that's going to be a very strong bearish sign, and you may want to either lock in some profits or take your positions out. If you're interested in getting started in crypto though, and you want $25 for free, all you have to do is open an account with Newton using the link in the description to this video. If you deposit and trade $100 or more, they will give you a $25 deposit. So it's literally a 25% risk-free return on your $100. When it comes to crude though, or oil and gas, we have seen a little bit of a rally over the last sort of week and a half. It did tail out over the last 48 hours, but we have established a low. We're basically testing resistance right now. And if we can see this kind of bullish trend that we've seen over the last week continue for another week, that would be a very good sign of a breakout. So I'm watching this one closely. I'm also watching uranium closely. The price of uranium has absolutely skyrocketed from $50 a pound all the way to $86 a pound. I've been pointing this out for the last 3 or 4 weeks, and this is super big here because if you're a swing trader and you just want to take advantage of huge price movements, uranium and Bitcoin are the places to be right now. When it comes to earnings, there is pretty much nothing going on. I couldn't find anything. Earnings Whisper isn't showing anything. So earnings isn't really something to think about this week. There are a couple of things to think about though. Monday is Christmas, and so markets are going to be closed. They do open up on Boxing Day. Crypto markets are doing extremely well. Real estate is super interesting right now. And so if you look around the world to kind of see where everybody else is at, Germany is one place that has actually stuck out to me because their real estate market is down 10% in the last quarter. Their bubble is bursting, is how a lot of people are describing it, and it is caused by these higher rates putting companies and individuals and organizations into insolvency and basically not being able to afford the real estate that they purchased. That is causing a flood of new real estate to hit the market. It's causing prices to decline, and the bubble is bursting in Germany. And I am watching to see if any of those signs or red flags pop up in the markets here in Canada and the United States. So far, we're seeing a lot of mortgages get really extended. So it's going to be interesting to see where those mortgages sort of fall over the next year or two and what happens to the people and businesses that are over leveraged. When it comes to most analysts and most big investors though, they are expecting rate cuts in 2024. And so something to think about here is if rates go from, let's say, this 4 to 5% range back down to 2% range, which companies are going to do the best, or which companies are going to do well in that low rate environment? In my opinion, I think banks and utility companies are going to become a lot more attractive in that type of environment, and we are already starting to see that in some of the price increases. I've bought Enbridge, I've bought Brookfield already, and I have bought a bank ETF. I post all of that in my Discord chat again. So definitely check that out. I also share my cash flow portfolio on Blossom Social. So if you want to see my entire cash flow kind of dividend portfolio, everything is posted there, as well as a lot of my analysis. The Santa Claus rally, that is what we are in right now, and that's sometimes what people call it. They've got money at the end of the year. They need to invest it. They need to open accounts. They need to do something with it, or they just want to get ready for next year. And so a lot of people are buying and selling it in the markets right now. And so that could explain, and that could be the reason for the run-up that we've seen over the last little while. One thing to consider, though, we are coming to the year end, and so the tax season ends December 3rd, or not the tax season, but your financial year end is December 31st. So if you want to take advantage of any tax loss harvesting, it's definitely something that you might want to consider right away. So basically what that is if you have a loss in the market right now, you can sell that loss and take that loss and use it against your taxes. This does not count for registered accounts like your TFSA or RRSP. But if you have a big loss right now in, let's say, your margin account, you can sell that and you can realize that loss and you can use that to help you on your taxes. And then 30 days later, you can buy that same stock back again. Or for an example, you could buy one of their competitors. So just something to think about. I do have some videos on tax loss harvesting, but coming to the end of the year, so definitely something to consider. Also, there are certain accounts where it's beneficial to open them up earlier. For instance, in Canada, the first home savings account. I'm not sure if there's any in the US like this, but you might want to open this account earlier, because if you open the first home savings account this year before the end of the year, you get $8,000 worth of room to contribute. And then as soon as January 1st hits, you get another $8,000 worth of room in that exact same account for contributions that are totally tax-free and tax deductible. And so if you are looking to basically set yourself up financially, consider opening a first home savings account, because it could be a huge benefit for you. Now, when it comes to stocks that I'm watching this week, there's a lot on the go. First one that I want to point out to you is TC Energy. I like their main competitor, which is Enbridge. I think it's a great company. I've talked about Enbridge a lot, and I've bought Enbridge. I also like TC Energy, though, especially from a technical standpoint. We've got some major resistance here. We have finally broken out of resistance. We've crossed above our moving averages, and it looks like we have confirmation of a new bullish trend. And so I like TC Energy at these levels. There's a lot going on with the stock, though, so if you're going to buy into this for the long term, make sure you understand the transactions and the business setup that is happening at TransCanada or TC Energy. But as of right now, the technicals look great. I think the industry is going to see a little bit of a bump with some of the cuts that we've seen in production, and the volume is increasing here. So all good signs for TC Energy. Next one here is Camoo Corp. They're the largest publicly traded uranium miner, and as I showed you earlier, uranium prices are going up, and if you look at Camoo Corp, the price of their stock is pretty much going up in line or sort of in the same direction as the uranium prices. As uranium was hovering around $50 and trading sideways, so was their stock. As uranium prices went from $50 to $80, their stock went from $25 to $46. And so we're sort of seeing the same trend here. If uranium prices continue to go higher, I think Camoo Corp is going to do extremely well. Another company I'm watching right now is Robinhood. We have got a couple of catalysts here with the boom in crypto. We've got a lot more retail investors in the market. Robinhood is starting to make some better decisions from management, and I'm watching the stock right now because from a technical standpoint, we've got a double bottom right here around $6 and $7. We've also got a triple top right here around $12, and if we can break out and retest, those would both be very, very positive signs on Robinhood. And if you look at this stock compared to where it was at a few years ago, it is trading at the bottom right now. I'd be surprised if it went lower. It could definitely go lower. But as of right now, we got a double bottom, we got a triple top here, and I'm watching for the breakout, or I'm watching for it to come back down to this $6, $7, $8 range and buy in off of support. So that's my strategy there. This one, I'm not in a huge rush to get into, though. I'm taking it patiently. And last one here is Brookfield Renewables. I own this stock. I like the stock. I bought in probably in the middle here somewhere. And I think they're going to do extremely well long term. I'm not 100% sure that this is the bottom, but if we break out through $40, I'm going to be pretty confident that we hit the bottom down here at 30. We're making our way back up. And just right there, man, you could have made 33% on this stock, which is just absolutely insane considering what the company does is operate renewable energy systems and acquire renewable energy systems for the next 50 years. And so I like the company, I like the stock, I like what they're doing. I wish I bought more, but hindsight's 2020. If you're interested in seeing my portfolio for cash flow and dividends and generating income, that's available on Blossom Social. If you want to see my swing trades and my technical analysis and my kind of in-depth day-to-day operations, that's available on my Discord chat. You get $25 for free with Newton if you sign up and trade $100. And I've got all my courses on Skillshare totally free. Everything is at the link in the description down below. And that's it for this video. Merry Christmas. Thank you so much for watching. I hope to see you again. And thank you for all the support. Appreciate it.